Dear all, welcome back to my YouTube channel Prassimplified. I'm doing good. I hope you are doing good too. I hope you are liking my videos. The purpose of this video is to let you know what is HRA, what are the restrictions or limitations applicable while claiming HRA, how you can claim HRA practically to your employer, what form you have to file, what are the documents you have to keep in mind, and what are the record or proofs which you have to keep, whether you can claim HRA as well as interest on loan deduction if you are also self-occupying the house property in a different city, or if you're self-occupying the house property in the same city. If I'm not receiving the HRA itself in my payslip, what is that extra deduction which I can take? On that aspect also I'll be covering on a broader basis. So all that I request you to please go through my entire video, because I'll be covering very multiple tricky scenarios, so you can see in which scenario you fall under the real life and take best use of this video. So without wasting any further time, let's go into the slides, guys. So guys, let's get into HRA taxation. First question which comes to our mind is, which is the governing section for HRA under the Income Tax Act? It is section 10 subsection 13A. What are the conditions to be complied? How much exemption will I be allowed? How to claim HRA practically? I'll take all this step by step. Firstly, what are the conditions to be complied? Those who are interested in reading these sections can please go through this section. I have highlighted the thing in bold. You can pause the video and watch this section. To all those who are not aware of the sections or does not understand how to read the section, I have made it in a very simplified manner in the next slide. So if I want to dissect this provision in simple words, it tells these conditions, or it states these conditions. That is, the HRA must be received by whom? By employee from the employer. Rent must be paid. That is, you have to actually pay the rent. Rent must be paid in respect of residential accommodation. And the property must not be owned by the taxpayer, because you're staying in the property on rent. That means you should not be the owner of the property. Then the property must be occupied by the taxpayer. What is the difference between D and E? In D it tells you should not be the owner, but in E it tells you should stay there. You should occupy that property, which means you have the free will to move in and move out of the property. So now let's get into the basic format of HRA. Firstly, it tells what is the actual HRA received. From this amount, 3 calculations you have to make, and out of these 3 calculations, the lower one is your exemption. What is the first calculation? That is actual HRA received. This is the minimum amount. This is the maximum amount you shall get the exemption. More than this, you will not get the exemption. Next, actual rent paid minus 10% of salary. Actual rent paid easily you can calculate, you know it. 10% of salary. Question comes, what is salary? For that, I'll take you to the next slide. Salary means basic plus DA in terms plus commission as a percentage of turnover. What is basic salary? That will be there in your payslip. What is DA in terms? DA in terms means it should form part of your employment benefits. That is, in your employment letter, if the calculation of gratuity, PF and all while they are doing, if they are including this DA in those calculations, that is nothing but DA in terms. That is means it is forming part of your employment. If that is the case, you have to include it in your salary income. Next, commission as a percentage of turnover. If you are, for example, a sales employee, your commission sometimes will be given by the employer on the percentage of the turnover basis. If that is the case, include that also under this calculation. So only 3 components: basic plus DA in terms plus commission as a percentage of turnover. So you know what is salary now. Once you know what is salary, apply the B. After this, C, that is 40% or 50% of salary. You know what is salary already. Now you should know whether you have to apply 40% or 50%. If you are in a non-metro city, it is 40%, and if you are in a metro city, it is 50%. So what is metro and what is non-metro? These four cities, that is Delhi, Kolkata, Chennai and Mumbai, are metro cities. Those who are staying in other than these cities are non-metro cities. So if your employment is in these cities, that means it will be 40% of it will be 50% of the salary, and if the employment is not in this city, it will be 40%. Now once you arrive at these figures, whichever is the lower, that is A or B or C, that will be your exemption, and from the actual HRA received, deduct this exemption, you will come at taxable HRA, which will be taxable in the head salary income. Let's take an example. Let's say actual HRA received is 1,80,000, that is 15,000 per month. Okay, so what is the exemption allowed? Actual HRA received 15,000 into 12, 1,80,000. Actual rent paid minus 10% of salary. Imagine your rent paid is 12,000 per month. So 12,000 into 12 minus 10% of, let's say 3,48,000 is your salary. So 1,09,200. Next, 40% of salary. I have assumed I am in a non-metro city. Okay, so 40% into 3,48,000 comes up to 1,39,200, which is the least of this, 1,09,200, which is your exemption amount. From 1,80,000 which you actually received, 1,09,200 is your exemption, and taxable HRA will be the balance 70,800. Let's little bit still more tweak the scenario. Let's say actual HRA received is 1,80,000, but you are actually paying the rent of 20,000 per month. So you are receiving 15,000 per month, but you are paying 20,000 per month, which is more than your HRA received. So minus 10% of salary, which comes to 2,05,200. Next, 40% of 3,48,000, which comes to 1,39,200. Here, even though you have paid, you are eligible for 2,05,200, this will be limited, right? This is lower. Hence 1,39,200 is your exemption amount. Taxable HRA is 4,800. So from this, what you understood is that even though you pay more rent to get more exemption, still your salary will be fixed, right? Because of which the 40% of salary will be fixed, and that will be restricting your exemption. So the HRA formula itself is framed in such a way that you cannot play around with the rent. So if you are increasing the rent, that means this will limit, that is the 40% of salary will be limited. But if you are paying lower rent, that itself will be limiting you with the exemption. So you cannot exorbitantly claim the rent as such. So these were the three simple illustrations which I wanted to give. Next one, the question comes how to submit and when to submit HRA details. So for this, you will have to fill in the format given by the employer in form 12BB. This you will get during say December or January, depending upon the employer policy. You have to submit this proof of investment and exemption. When you are submitting this proof of investment and exemption, you have to give these HRA details. What are the basic details which you have to give? How much rent you are paying, who is your landlord, what is the rent amount, whether you have the PAN, all those basic details you have to submit, and your employer itself will compute all the calculations which I did earlier. Now next question comes, what if I forget to claim HRA exemption in my form 16, or I did not even submit all these rent details to my employer itself? I forgot, though I actually pay rent, I forgot. Or if employer did not include itself my HRA exemption, what can I do? Will my HRA exemption be lost? No, your HRA exemption will not be lost. What you have to do is, while filing your return of income in say July, that is the due date, you have to claim this HRA exemption while filing the return of income itself. How? By following the above format which I prescribed. So the format above is useful in this scenario. Next, can you claim HRA in the below scenarios which I am going to take in the next slides? For all the scenarios which I am going to take, one common assumption is that you are receiving the HRA. That means there is no doubt that HRA is received. You are actually receiving the HRA. Basis that assumption, I will be making the below slides. Scenario 1. You are having only one house property and that is on rent. Can you claim HRA? Definitely you can claim HRA because you are having only one house property and that is on rent. Next, you are having only one house property which is self-occupied. Since you are not at all having a rental property, you are not at all paying the rent. That means there is no HRA exemption which can be claimed on this case. But since you are paying the loan, since you are repaying the loan, uska interest and principal you will be getting. How? Refer my last video under which head you will be getting it. Scenario 3. You are having one house property on rent which is in Bangalore and one more self-occupied on loan which is in Mangalore. Can you claim HRA? Yes. Why? Because on the rent which you pay in Bangalore, you will be getting a HRA exemption because it's a rental property. On the self-occupied property which is in Mangalore, you can claim the interest and principal which you actually pay. So in these cases, there are chances that there might be a notice because you're claiming double deduction, that is once in HRA and also for the loan which are taken for self-occupied property. But because it's in different cities and your work location might be different, because normally people work in one location and stay in one location, so all those things will happen. So this is a common scenario. You can explain it to tax authority. But next case, let's see. That is, you are having one house property on rent in Bangalore itself, and also you are occupying the self-occupied house property which is on loan in Bangalore itself. Can I claim both HRA as well as interest on loan deduction? Yes, you can claim, but you have to give justifiable reasons. And what can be the justifiable reasons? My house property which is situated on rent and self-occupied is at a very particular distance. I cannot commute easily, hence I have been staying on rent. And you have to give the rental agreement details, the rent receipts details, the actual payment of rent which has happened through bank. All those you have to keep for your records. Let us say one more scenario. That is, you are having one house property on rent in Bangalore and also house property on rent in Mangalore. So both are your rental properties, but you are staying in Bangalore for the work purpose, but you will also come in Mangalore with your parents to live in whenever you have free time. So both are in your occupation basically. Can you claim HRA? In which house property is the question. My dear friends, please do note that you can claim HRA for whichever house property, that is Bangalore or Mangalore. Only one condition you have to fulfill is that both has to be at your occupation. Definitely you can't be an owner because it is a rental property, but it has to be at your occupation. And occupation ka matlab kya? Occupation means you have the free will to get in and get out. No one is commanding that you cannot come in, come out. So you are freely occupying both the house properties. That is, you can, whenever you want, you can be in Bangalore. Whenever you want, you can be in Mangalore. There is no restriction imposed. And if that is the case, whichever is beneficial for you to claim exemption, you can claim it, guys. So please keep these aspects in mind. But yeah, don't forget the basic details that you have to keep all the necessary documents of rental, payments, landlord, PAN, etc. Next, having one house property on rent in Mangalore and also house property on rent in Mangalore itself, but in the same building but with different floors. Very interesting scenario. Let us say you have a whole building. In second floor you are staying on rent, and in third floor you are having a self-occupied house property. In second floor you are staying on rent, and even in third floor you are staying on rent. In one place you are staying, in one place your parents are staying, but both are at your occupation. That is, you are freely available to get in, get out. Now again the question comes, because it is in same building on different floors, can I still claim HRA on any of my houses because both are in occupation? Definitely you can claim, but the chances of litigation in this case is very, very, very high, because you have to properly justify as to why you are staying in different house, because the property building ka size may be different, due to which, that is, the square feet of the building may be different, due to which the rent may be varying. Hence you have to keep all those aspects and justify the tax authority as to why you are staying in a different house. So here basically justification matters, and if you have proper justification, there is no restriction in Income Tax Act for you to claim. You have to just necessarily justify the tax authority. You have to build up the defenses. That's it. But necessarily the chances of notice in these cases is very high. But it is not that you cannot claim, which is a very big misconception people have. Next, you're having one house property on rent in Bangalore and also receiving HRA in India. For a shorter period, you are posted to an overseas place for short-term assignment. But for that short-term assignment where you are staying, you are getting a rent-free house. Now you are getting an HRA which is taxable in India. You are paying the rent in Bangalore. Can you claim HRA? Definitely you can claim HRA. Just because you're getting a rent-free house in overseas, that does not mean that you cannot claim HRA, because it is still at your occupation. The Bangalore house is still at occupation. It is occupied by your family. It is occupied by you. You can freely move in and move out. Next, very crucial questions which people repeatedly keep on asking. So I wanted to cover this aspect. That is, can I claim HRA exemption even if my landlord is my own father or any relative? That is, if I'm paying rent to my own father or any relative, can I claim HRA? Yes, yes, yes. There is no restriction in the act. But do keep these in mind, that the rent which you pay should be reasonable and it should not be exorbitant. Also, very importantly, rental income has to be declared by your father or whoever the relative you are paying in his return of income. He has to show that rental income in his return of income, or else the person who did not show will get a notice. Can I claim HRA on two houses? If you are staying in two houses on rent, you can't claim HRA for both the houses. It can be claimed only on one houses, but yeah, you can choose which is beneficial depending on your occupation. Next, what if I cannot claim HRA exemption because I am not receiving only my HRA in my salary slip, or I am not a salaried employee but I am paying the rent and I do not have any kind of house in this city or anything? Can I still claim this rental deduction? Yes. Under which head? Go for section 80GG car deduction. There is a specific section called 80GG. This section I'm taking on a very broad basis, guys. I'm not going into details because there are a lot of complications involved in some of the steps. I will be trying to cover this in my next video or so, but basic details as to how you can claim, what are the conditions, those I will be covering. That is, the conditions to be fulfilled is you have to be not receiving any HRA, obviously. Then you have to pay the rent, that is also obvious. Next, you or your spouse or minor child or HUF of which you are a member should not own any residential accommodation at this place where you are currently residing or doing your business. Also, none of the amount has to be chargeable under your house property head. All these conditions has to be satisfied for 80GG deduction. Also, you have to additionally file Form 10B online. So how does Form 10B look like this? It's a very basic details that you have to give your name, which is the previous year, which premise you're occupying, how much rent you have paid, all those basic details you have to give, and how much deduction you want to claim. And what is the format for the deduction? Lower of these three you will be getting, that is 5,000 per month, or 25% of adjusted total income, or actual rent paid minus 10% of adjusted total income. This is easy. A. In B, 25% you can know, but what is adjusted total income? This is a bit tricky, guys. This is why I told I will not be covering in detail, because I might need a particular session for this itself. So just on a broad basis, I'll be letting you know. This adjusted total income means whatever is your total income. Total income means what? The total of 5 heads minus the deductions. So whatever is your total income, out of which you have to exclude the special rates of taxation. Now, what is the special rates of taxation? It is your long-term capital gains on shares if you are earning, or let's say casual income you are earning, and also whatever the deductions which you are taking from ATC to ATU, that you have to deduct. But you should not take 80G car deduction, because you are yet to take. Before taking this deduction, you have to take that total income. So this was the things, guys. So I hope whatever the session I have taken today is very informative to you guys. If you have any doubt on any aspects, you can do comment on the comment section. I hope the same will help you in real life. If you still have any doubt, if you do not want to comment in my comment box, you can definitely message me. Thank you, guys. That's it for today. Please do subscribe my channel if you really found informative. I'll be definitely coming with more and more such kind of videos. Thank you, guys. Have a nice day.